Assalamualaikum and hi everyone. So today we are going to present our group assignment, which our business is producing a tablet casing for Casiswa's device. So our mission is becoming the leading local brand for stylish, high quality tablet case for students in Malaysia during device protection while keeping a modern looks. Our vision is optimally protecting student device in tablet case that are tough, shockproof, and suitable for use in active learning environment, providing quality product at affordable price and offering high quality tablet cases that are accessible to all students without straining family finance. So what is Casiswa? Casiswa is a special protective tablet case for uni students who receive the Casiswa device. Casiswa made from durable materials and it protects the tablet from bumps and damage. It's also equipped with a foldable stand, steel compartment, and ergonomic design. Casiswa comes in a variety of fun colors with options to print the student's name. This product combines protection, style, and function is perfect for supporting today's students in digital learning. Now I would like to explain the target market of our product, Casiswa. So the primary target market for Casiswa is university and high school students, especially those who receive tablets from the Malaysia Ministry of Education under its Educational Digitalization Initiative. These students use a tablet almost every day for learning purposes. They attend online classes, complete assignments, access digital learning materials, and communicate with teachers through educational platforms. Since the tablets are used frequently and carried around between class or home, they are exposed to risks such as accidental drops, scratch, dust, and even water spills. To solve this problem, Casiswa is designed to provide maximum protection. Our casing is shock resistant, waterproof, and has an anti-slip grip, making it easier and safer for students and handle their tablets throughout the day. Besides students, our second target market is parents and guardians. Parents invest in this device to support their children's education, so naturally they want to protect them from unnecessary damage. Casiswa is well suited for online selling because Malaysians increasingly prefer shopping online through e-commerce platforms. Online shoppings offer convenience, accessible, and flexibility, making it easier for both students and parents to purchase our product anytime and anywhere. To further increase customer engagement, we also plan to use a Shopee Live. Through live streaming sessions, we can demonstrate the product's durability, explain its features, answer customers' questions in real time, and build trust before customers make their purchase. Besides Shopee, we also choose TikTok as our second sales platform. This is because many students and parents spend a significant amount of time on TikTok watching educational, technology, and lifestyle content.
Now I will present section 2, which is cost structure analysis of Casiswa. Firstly, product costs are the costs directly involved in producing our tablet casing. These costs include direct materials, direct labor, and manufacturing overhead. They are considered part of the product cost and will only be recognized as an expense when the products are sold. On the other hand, period costs are costs that are not directly related to production. These include administrative expenses and selling and marketing expenses such as advertising, transportation, and office expenses. These costs are recorded as expenses in the period they are incurred. Next is the classification of fixed costs and variable costs. Fixed costs remain the same regardless of the production volume. Examples include rent, insurance, salaries, and depreciation. These costs must be paid even if production decreases. Meanwhile, variable costs change according to the number of products produced. For Casiswa, these include direct materials, direct labor, utilities, and machine maintenance. The more tablet casing we produce, the higher these costs will be. In conclusion, understanding the cost structures helps Casiswa manage its expenses more effectively, improve budgeting, and make better pricing decisions to achieve long-term profitability.
Moving to section 3.1, let's look at the table 9. This table highlights our product cost breakdown per unit. As you can see, our total cost per unit is 36 ringgit, which comprises RM 13.50 for direct materials, 9 ringgit for direct labor, and RM 13.50 for manufacturing overhead. By applying a markup on a cost of 66.7% based on our total production of 2,300 output units, we have adopted the cost plus pricing method to arrive at our final selling price of 60 ringgit. What this means in practical terms is that for every unit sold, we secure a healthy contribution margin that acts as a financial buffer. This ensures our operations can run smoothly and remain flexible enough to adapt to future operational scaling requirements without guessing our prices blindly. Now, for our justification in section 3.2, there are several key reasons for this choice. First, this cost plus model creates a stable foundation for our cost volume profit analysis, making it significantly easier to calculate our break-even point. Secondly, this approach serves as an excellent risk mitigation tool. Since our production volume currently limited to 2,300 units, we face higher vulnerability to sudden price shifts in materials. By securing a 66.7% markup, a safety margin is effectively established to protect our startup from immediate financial strain while we build our presence among university students. Lastly, despite being cost-driven, the 60 ringgit price point remains highly competitive within the Malaysia e-commerce market. It balances a healthy profit margin with affordable pricing for our target customers. As a result, using cost plus pricing helps us prepare more accurate sales and cash budgets as our business grows.
Next, I will present the budgeting and financial projection for Casiswa, covering the 6-month period from May until October 2026. Budgeting and financial projection are important managerial accounting tool because they help business plan future operation, control expand, manage cash flow, and evaluate financial performance. Through this projection, Casiswa can better understand its expected business performance during its initial stage of operation. Okay, for sale budget, obviously I would like to present the in my Casiswa is expected to sell 118 unit generating sale revenue of 10,800 ringgit. The sale revenue is projected to increase to 220 unit in June, resulting in revenue of 13,200 ringgit. In July, the expected sale value will rise to 250 unit, granted a 15,000 ringgit. And even revenue, this upward trend is expected to continue in suggest with 218 unit sold. Contribution system 16,800 ringgit in sale revenue. Furthermore, sale are projected to increase to 320 unit in September and reach 350 unit in October, generated 19,200 ringgit and 21,000 ringgit respectively. And overall, Kasiswa is projected to sell, you can see a total of 1,600 unit and generate total sale revenue of 16,000 ringgit during the 6-month period. Is the cash budget, which estimate the expected cash inflow and outflow during the operating period. Kasiswa is expected to receive 10,800 ringgit in cash received, while cash payment is estimate of 15,000 ringgit, resulting in cash deficit of 3,200 ringgit. In June, the cash deficit is projected to decrease 1,300 ringgit. By July, the company is expected to achieve a break-even cash position. And then we can see starting from August, Kasiswa is projected to generate a positive cash flow of 103 hundred ringgit, which is expected to increase to the 3,200 ringgit in September and 4,000 ringgit in October. Overall, the company is projected to receive total cash inflow of 19,600 ringgit and ensure total cash payment of 90,200 92,000 ringgit, resulting in net positive cash balance of 4,000 ringgit. Next slide. Section present the estimate spend for the 6-month operating period. Casiswa is expected to ensure total operating expense amounting to 54,500 ringgit. The largest expense category is the manager salary, amounting to 17,000 ringgit, followed by a rental spend of 15,000 ringgit, and clerk salary totally to 20,005 ringgit. And additional, the company expect to ensure utility spend of 2,100 ringgit, while advertising, transportation, insurance, maintenance, telephone, and registration expense account for the remaining operating costs, and these expense are necessary to support the daily operation and business growth of Casiswa. For the finally, 4.4 is projected income statement for the 6-month period ending on the 25th of October 2026. So based on our financial projection, Casiswa is expected to generate total sale revenue of 19,600 ringgit after deducting the cost of goods sold amounting to 57,600 ringgit. The company is projected to earn gross profit of 28,400 ringgit. However, you can see is after considering operating expense of 54,500 ringgit. Casiswa is expected to ensure a net loss of 16,100 ringgit during the 6-month period, which projected loss in mainly due to the high operating costs associated with the early stage of business operation, including management expensive, marketing activity, and advertising costs. So that's all for me. Thank you.
First, let's look at the contribution margin. Our selling price is RM60 per unit, while the variable cost is 36 per unit. Therefore, the contribution margin is RM24 per unit, with a contribution margin ratio of 40%. This means that every unit sold contributes RM24 towards covering fixed costs and generating profit. Next is the break-even point. The total fixed cost is RM54,500. Based on our calculation, Casiswa needs to sell 2271 units or achieve sales revenue of RM136250 to break even. However, our projected sales are only 1,600. For the target profit analysis, if Casiswa aims to earn a profit of 20,000 ringgit, the company needs to sell approximately 105 units, generating sales revenue of RM186,300. Lastly, the sensitivity analysis shows how change affect profitability. A 10% increase in selling price significantly reduces the loss, while a 10% increase in variable cost increases the loss. Meanwhile, a 20% increase in sales volume also helps reduce the project loss. In calculation, Casiswa should focus on increasing sales volume, controlling production costs, and improving pricing strategies to achieve profitability in the future. Thank you.